Welcome to the Lighthouse Canton IDEAs Podcast series, a platform for insightful conversations with industry leaders and experts, sharing insights and perspectives from across and beyond Lighthouse Canton. This is Episode 13, Alternatives in Focus, Asian Private Credit, a Korean-Singapore Institutional Perspective. In this conversation, Won-Ki Kim, Executive Director, Head of Global Institutional Sales at Lighthouse Canton, and Kijung Kwon, Managing Director and Chief Executive Officer of NH Absolute Return Partners, discuss how institutional investors are accessing Asia's rapidly expanding private credit markets. From Singapore's role as an institutional gateway to exploring cross-border partnership models, our guests explore the strategies and opportunities shaping this early-stage asset class. This podcast was recorded on the 1st of October, 2025, and was prepared based on information available as of the date of recording.
Hello everyone, and welcome to today's episode of the Lighthouse Canton IDEAs Podcast. I'm your host, Samantha, here at Lighthouse Canton. In our last episode, we explored the explosive growth of Asian private credit markets with our colleagues Pranab Gupta and Ankit Agrawal, diving deep into why this asset class has grown 4 times over the past decade and why it stands for such a massive opportunity across the region. Today, we're shifting our focus to the institutional investor perspective, specifically how international institutional capital is accessing these Asian private credit opportunities. While last week we discussed the what and why of Asian private credit growth, today we're exploring the how and where. From our previous conversation, we established that Asia represents only 6 to 7% of global private credit, despite being 35% of global GDP, with assets under management growing 4-fold over the past decade. Set against the macroeconomic backdrop of Basel IV implementation, constraining bank lending, and persistent low yields in developed markets, Asian private credit offers compelling risk-adjusted returns. We're seeing 12 to 18% for performing credit and 18 to 24% for special situations in markets like India, where the private credit market, currently valued at 25 billion, is expected to grow to 70 to 80 billion by the next decade. But here's the institutional challenge: accessing the right opportunities from global markets such as Seoul, Tokyo, or Dubai requires navigating regulatory frameworks, currency hedging, and local market dynamics. And so the question is execution. How do major institutional investors, pension funds, sovereign wealth funds, insurance companies managing hundreds of billions deploy capital across diverse Asian markets? What does it take to successfully identify opportunities in India's 25 billion private credit market or navigate the regulatory complexities of Southeast Asian financing? Joining me today are 2 executives who live this reality daily. Won-Ki Kim is Head of Global Institutional Sales at Lighthouse Canton. Won-Ki brings over 2 decades of experience building and managing career desks and facilitating cross-border institutional flows at global investment banks. He's the architect of how institutional capital accesses global and Asian opportunities and understands intimately the challenges large institutions face when venturing into complex emerging markets. Kijung Kwon is Managing Director and CEO of NH Absolute Return Partners, the Singapore-based investment arm of Korea's NH Group. With his vast experience of working in one of the largest pension funds in the world and global investment banks, Kijung oversees institutional capital deployment from one of Korea's major financial cooperatives into Asian markets, with deep expertise in identifying and executing opportunities across the region's most dynamic private credit landscapes. Today's conversation will take us from Singapore's boardrooms to India's deal execution, exploring how international institutional investors are practically accessing the Asian private credit opportunity we discussed last week. So thank you, gentlemen, for joining me in today's podcast.
Thanks, Sam.
Thank you. So let's start with the big picture. Singapore has quickly established itself as a financial hub for Asia. For private credit specifically, Singapore offers a unique advantage that makes it an optimal base for international institutional investors accessing Asian opportunities. So Won-Ki, from your experience of working in major financial cities across Asia, how has Singapore's financial ecosystem evolved to specifically support institutional capital?
Thanks, Sam, for that generous intro, and thank you, Kijung, for joining us today. We all know Singapore offers a very stable regulatory environment, strong legal frameworks, and access to both global capital and regional deal flow. For private credit, where transparency, enforceability, and investor protection are critical, these factors matter a lot. It's also strategically located between South and North Asia, the fastest growing markets for private capital. Singapore's emergence as the region's financial hub has positioned itself as a gateway for institutional capital, seeking Asian exposure, offering regulatory certainty, like I mentioned earlier, operational infrastructure, and market access that simply doesn't exist anywhere else in the world or in the region. Specifically private credit, Singapore provides the platform where global institutional expertise meets local market opportunity.
So Kijung, NH Absolute Return Partners chose Singapore as its regional platform rather than establishing a direct presence in India or, other Southeast Asian countries. For a major Korean financial institution, what drove this decision, and how does Singapore enhance your ability to identify and execute large-scale private credit opportunities?
Thank you, Simon Wonki, for having me today. From an institutional investor's perspective, Singapore is not just about geography. It's about credibility. Regulators have proactively encouraged private market participation. Tax structures are very favorable, and there's a strong talent pool of asset managers. That combination makes it a very natural hub for deploying capital across Asia. Of course, we have an office in Hong Kong too, but its function is investment banking rather than asset management because we believe Hong Kong still got its own unique advantages, but it could work as the main gate to lead to mainland China. So the Hong Kong office has been focusing on Hong Kong China deals only. However, Singapore plays as a regional hub for investors to procure excellent opportunities in private credit in India, Indonesia, Thailand, as well as Singapore, so that investors are able to build up diversified portfolios on top of a reliable infrastructure for investments.
So that's a really compelling case for Singapore as the platform. And I think this timing of this conversation is really quite perfect. We've just wrapped up Super Return Asia here in Singapore, where we ourselves, Lighthouse Canton, spoke at the Private Credit Summit. I think the level of institutional interest was quite striking. We had lots of LPs asking very specific questions about, diversification of their allocation strategies, due diligence processes, and how they can access opportunities in emerging markets like India and Southeast Asia. So I'm just going back to these conversations in our previous podcast about global GDP being 35%, yet private credit in Asia is only 6 to 7% of that global private credit market. And, that's a massive disparity. We're also seeing projections that private credit in the global market is poised to reach about $3 trillion USD in the next 4 years. And, from 2020 to 2023, it's reported that the compounded annual growth rate of Asia's private credit AUM alone was about 19.5%. That's nearly double that of the average of 11.5%. So really, what's driving international investors to step in now and close this gap? And why are they looking at Asia, Kijung?
Traditional financing channels like banks are constrained, especially after Basel III and adoption of Basel IV and stricter capital rules. So companies in Asia, especially middle-sized corporates, need alternative source of capitals and financing. That's where private credit steps in, offering flexible solutions while generating attractive risk-adjusted returns for investors. For example, U.S. market. Before 2008 global financial crisis, actually the largest size of banks covers all SMEs lending platforms. But after 2008 and the lack of their capitals, that lending function is gradually moving into private sectors. That's why we had a now super mega sized private credit market in US. So I think that logic can be applied to Asian markets. The common aspects for the markets which got better opportunity in private credit, such as India, Indonesia, and Thailand, and Asia, they don't have mega banks. And the lending business system is very thinner. China, Japan, and Korea are offering less opportunity for private credits in consumers and SMEs spaces. For example, Korea has three layers in lending businesses, which consist of largest size of banks, saving banks, who are lending to mid to high credit risk segment like SMEs and individuals in low income brackets, and capital companies that cannot take deposit from customers but can lend only, like a similar business model as NDFC in India. But I believe private credit market in Korea will be opened within 5 years, because in Korea, the saving banks have been highly exposed to property development, and many players have suffered due to sluggish property market for last 5 years. So with the lack of capital from saving banks, we are going to see some potential growth in private credit market in Korea too.
Yeah, I totally agree with you, Kijung. And more importantly, Asia's at a different stage of development compared to the US or Europe. In the West, the private credit market has matured. In Asia, we're still in the early stages of the cycle. That means there's still inefficiency, less competition, and higher spreads available. Investors get to participate in the growth phase of this asset class, which is pretty richening. But Kijung, you just mentioned about Korea and Japan's system and the three layers. And you mentioned approximately 5 years. Is it 5 years, or how do you see the Korea and Japan market, private credit market, catching up? Not really catching up, but equaling the opportunities that we see here in South Asia?
Basically, in my humble opinion, we have to separate the India and Southeast market and Japan and Korea markets, because even if we are going to see some growth potential in private credit market in Northern Asia like China, Japan, Korea, but the focal point will be different, because India and Southeast Asia market, the private credit more toward individuals or consumer lending or SME lendings. But still, as I share, Korea and Japan, even China, are dominated by the commercial banks, large and meta-sized banks. So even if we will get some opportunities in private credit, but the focal point would be acquisition finance, which would be related to M&A activities. Because in order to see some huge size of the acquisition finance, definitely M&A and the robust activities from a private equity side must be followed. But India and Southeast market, we have a very thin market from the private equity activities, especially M&A and buyouts. But northern part of Asia, we are going to see some huge, robust, the growth in acquisition finance, which is another big trend in private credit areas.
Mm-hmm. So what we're seeing here really is an opportunity for investors to come in and do more on the private credit side in terms of the structures, in terms of getting better risk-adjusted returns. And I think I want to understand from your perspective, Kijung, Southeast Asia, India, these economies, what is making them, so attractive at the moment in terms of the private credit market? Is it the demographics? Is it the economies, the innovation that's in there? Give me a bit more about that.
Sure. From institutional perspective, the India also offers diversifications. It's demographically young and consumption-driven, and reforms driven by the government, even local government as well, have steadily improved governance and transparency across the board. So for investors like us, India provides both yield and growth, which is rare to find together, because people enjoyed and liked Indonesia's private credits for the last 5 years, but the pricing itself, risk-adjusted pricing wise, India is offering more attractiveness than Indonesia markets.
If we go into some sectors, Kijung, NH Absolute Return Partners focuses on financial services, consumer sectors, B2B, SaaS. These align really well with corporate expertise on the Korean side. There's been a lot of emphasis on fintech initiatives, building up the Korean e-commerce platforms. Given your experience, what parallels are you seeing in India's growth sectors? Is the market deep enough to deploy significant capital, and what gives you confidence in India's scalability?
Sure. Korea industry has been doing well in e-commerce and fintech and the SaaS business as well. But scalability-wise, Korea has a limited size compared to India. That's why overall, we definitely prefer Indian market over Korea domestic markets in terms of scalability and growth potential. So we are a big fan of Indian fintech who are specialized in consumer lending spaces. Unlike other Southeast Asia countries, all fintech companies in India must be equipped with the relevant license, mostly NBFC license. And some people say that it might look like those fintech guys are not much flexible or agile, or they lost some freedom for business expansion. But to me, it's not true, because as a licensee, a fintech company runs in a stable playground and it gives investors credibility, while some fintech players in other countries have been all of a sudden suspended or regulated by the authority. They play in some gray area business because of lack of legal frameworks. So India government is encouraging digitalization in finance space, and there are plenty of good talents in digital businesses. And domestic fintech market is huge, so a player does not need to be nationwide player. If they are dominant player in 4 to 5 states, their scalability would be good enough to bring some, the good values. So on the other hand, we believe energy transition, including batteries and storages, is promising because due to the government's drive, solar and the wind alternative energies will be highlighted. Actually, people don't know that India markets wind and solar are the 4th largest market in the world. And electric mobility and bioenergy and waste to energy will be another key focal points, which will demand more capitals from private sectors.
I would also want to add, as Lighthouse Canton, as one of the big players in the Indian private credit space, we're seeing domestic Indian private funds gaining markets share from global players as well as local expertise. And as a big Korean institution like yourself, how do you compete against global giants and local expertise?
Oh, that's great questions. We recognize that local players in India have deep on-the-ground knowledge, and global players bring scale and brand recognitions. To be honest with you guys, my company cannot compete with the global size companies in terms of deal sourcing and deal executions, and also deal size. We collaborate with the trusted local partners and teams who understand the nuance of Indian markets, the regulations and the promoters and credit cycles. At the same time, we bring a global investor lens, a strong governance and risk management platforms, and the ability to connect Indian opportunities with international capital. So rather than competing head-to-head, we try to bridge the gap, giving investors confidence in global standards while ensuring our approach is grounded in local expertise. In private capital, especially credit side, that balance is what creates long-term and sustainable returns. We have some good example. Actually, we are a co-investor with Lighthouse Canton, because as a Korean financier, we have been building up our own experience in private credit, but India market, without any local partners and expertise, as a foreigner, it's very tough to penetrate into the market in terms of deal sourcing and executions, the regulation understanding wise. So the local partnership is essential and critical factor for successful investment for our end.
Thank you, Kijung, and we love being your partner as well. From my side, I can only emphasize once again how important it is to have the right partner and the right knowledge and coverage of the local market. We tell our partners in Korea time and time again, don't try to go in there by yourselves. Go in with a local partner. When you venture into less familiar markets, partnering with an established manager is the key. I've seen too many investors directly penetrate markets without a good partner with local expertise and end up with negative results. A lot of these brokers will bring deals that may have bypassed more than 20 to 30 local investors. The quality of the deals they see, they're not the best ones. They're more like low-quality deals. It is essential to find partners that bring these key things to the table. The first one is, like I mentioned, local expertise, but with global standards. In Lighthouse Canton, our teams are based in Singapore, India, and Dubai, giving us the on-the-ground insight. The second is track record, obviously. We've successfully deployed across cycles, showing discipline in structuring and risk management. And third is, like Kijung mentioned, partnership mindset. For us, it's not about just selling a product, but it's building a long-term relationship and alignment with institutional investors like yourself. We co-create strategies that fit the portfolio needs of what they need.
Thank you, Wong-Kee and Kijung, for those insights. I'm just going to go back to the question on drawing parallels from Korea's successful sectors and industries. So, as we all know, Korea has been extremely successful in exporting its culture. The K-wave has undoubtedly taken the world by storm. We're seeing K-pop and K-dramas everywhere, Korean cosmetics and Korean food. Do you think there are any learnings from Korea's success that apply to, the business and investment world?
I knew a K-culture question was coming up, Sam. Absolutely. Hallyu, one of the biggest lessons from K-pop's global success, is the power of localization while keeping the authenticity that we have. Korean entertainment companies didn't just export music. They built a whole ecosystem, from training systems to digital engagement, and tailored it to different markets without losing their identity. In business and investment, it's a similar story. To succeed in Asia's private markets, you need a solid foundation at home, but you also need to understand each local market and adapt, whether it's regulations, culture, or investor appetite.
In Kijung?
I think another big good lesson is collaboration. K-pop thrives on partnership, from global tours to brand tie-ups. In investing, the right partnership open doors and accelerate growth. So if we think about it, the K-wave is not just about music. It's case study in scaling globally with the discipline, creativity, and local sensitivity. So that's exactly what the mindset investors need in Asia, which is why NH Group thrives to good partnerships such as the one with the Lighthouse Canton.
Thank you.
I think that's a great perspective on how Korean business philosophy translates across, sectors and industries. Now that we've covered the serious business of billions in private credit allocations, I need to ask the really important question. When you're unwinding after closing a major transaction, what's your go-to K-pop karaoke song? I feel like this says a lot about you as a person as well. Are you more of like a BTS Dynamite person? Are you more like a Gangnam Style? Or have you latched on to the more, modern and catchier, Golden and Soda Pop by, the K-pop Demon Hunters, please?
Sam, I think you've taken away a few years on the age that Kijung and I are by mentioning BTS and especially Golden and Soda Pop. But I am a very keen dancer of Gangnam Style, like I did in our Diwali party last year. And I'm a keen fan of 90s Korean hip hop. Yes, so I guess those are, so more, a little bit more old K-pop is what I would turn to.
Gangnam Style isn't that old, so. And Kijung? Please.
Actually, I went to some Korean karaoke in Tanjongpor. With my family, and I tried to sing, the Soda Pop and Golden, but I gave up because too fast. So I'm an old man. So I'm like, like Wong-Kee. I'm also like, 90s Korean hip hop, and it's the older fashion.
Well, thank you everybody for joining us on today's podcast. It was really great having both of you, Wong-Kee, Kijung, to talk about the private credit markets and your perspectives on the Korean business philosophy. And thank you again, and hope to see you on the podcast soon.
Thank you.
Thanks, Sam, for hosting. Thank you, Kijung, for joining us. Thank you.
That was my pleasure. Thank you.
Thank you for listening in to the Lighthouse Canton Ideas Podcast. We hope you found this conversation insightful. Please subscribe and tune in for more episodes. This podcast has been prepared by Lighthouse Canton Private Limited and its affiliates for informational purposes only. There is nothing contained in this podcast that constitutes advisory services. This podcast shall in no circumstances constitute or be considered as advice to invest in any specific investment or investment class, vehicle, or financial instrument. The information contained in this podcast shall not be considered as legal, tax, financial, or other advice. You should consult a professional to obtain specific advice regarding the financial, legal, regulatory, tax, and other regulations applicable to you. You should consult a financial advisor authorized in your jurisdiction before making any investment decision to ensure that you fully understand the products and the potential risks involved.